sponsored by the Securities and Exchange Commission of Nigeria.
Welcome to Eye on Nigeria's capital market. I'm Wole Famrewa. A common attraction for investors looking at Nigeria is the population. Indeed, 1 out of every 5 Africans is Nigerian, and that ratio highlights the most attractive consumer market on the continent. In this episode of the program, we take a look at consumer-focused companies listed on the Nigerian Stock Exchange, find out why they are attractive, and their prospects in the context of expectations for the Nigerian economy.
Nigeria's population is the single most potent opportunity that we have in Nigeria. The government recently published its estimate of about 167 million people. That puts Nigeria as the 8th largest country in the world by population. So it ranks amongst the world's largest economies, and I think that is very interesting for Nigeria and basically indicates or implies that if we obviously utilize our population or human resource optimally, Nigeria could obviously rank as one of the world's largest economies.
The vast majority of our population is young, is under 30, and we don't have a huge middle class, but we have a large amount of people that are emerging from poverty. And as these people start to come up, they will start to demand goods and services.
Recent economic reforms have obviously led to a surge in the demand for consumer products. And to be honest with you, a lot of consumer companies are actually struggling to meet that demand.
We've actually invested in Nigeria, if we include next year and the previous 9, so over a 10-year period, we will have invested around £500 million Swiss francs, 500 million Swiss francs. Most of that in the last 4 years, with a deliberate effort to meet the consumer demand of a growing population here. So the products we had already introduced were doing very well, and we're very deep and vertical around 2 or 3 strong pillars.
In a volatile market, stocks of consumer-focused companies have been a shining light, outperforming the broader market by a wide margin.
Nigerian consumer companies have outperformed the broader market. They're up about roughly 11% year to date. The market, on the other hand, is down about 20%. This is based on the Nigerian Stock Exchange All-Share Index. And the reason for that sort of outperformance is just because investors generally tend to see the consumer companies as a safe haven, especially the staple food producers, because there's always the belief that despite sort of weak macro conditions, there'll always be very strong demand for staple food, and that is pretty much what you see reflected in earnings. So it's typically what happens globally. It's a global trend.
The Nigerian bourse offers a wide variety of consumer-focused companies, from brewers, soft drink bottlers, household product makers, and food manufacturers. Investors seeking to profit from Nigeria's large population have the opportunity to choose from companies like Nestle Nigeria, Guinness Nigeria, UAC, Unilever Nigeria, and soft drink bottler 7-Up.
Last October we celebrated our 50th anniversary, so we haven't been here just for a few years. And it does take a while for companies to establish their roots, establish their products, and get consumer acceptance of those products. Incidentally, the first bottles of 7-Up rolled out of our Ijora factory on 1st of October 1960, coinciding with this country's independence. So we celebrate our anniversaries at the same day every year. It took us a while to get there. Beverages and soft drinks were not necessarily well known in those days, but today our products, Pepsi, 7-Up, Mirinda, Mountain Dew, etc., have become household products. I mean, if we look at west of Nigeria and if we look at east of Nigeria, their economies are very tiny, very fragile, and this economy can get much stronger with the diversification of the income base. So the opportunities are enormous, but it does take time. It does take time to evolve. It does take time to capture those opportunities. Nothing in Nigeria will just happen overnight. The usual blood, sweat and tears story,
Well, I think it's probably Africa's time. I'm lucky I've worked for Nestle, as you say, in many places. Let's say 20, 30 years ago, it was Asia's time and the rising star of the world's economies. And we see now, of course, the BRIC countries with the S added now, sometimes for South Africa. Some analysts and some commentators are saying the S really should mean generally Africa. And I think in reality, that's where Nigeria's position is coming The fact is that Nigeria is the most populous nation within Africa. Seriously means that the opportunity is big here. And in terms of population, whatever that, 150, 160 million people, that means there are some rather serious opportunities to fulfill the needs of consumers here.
Most of the goods that consumer companies make are goods that are of necessity. And so people will tend, even in bad times, to still maintain the same level of demand when you compare it to other sectors. But I think the other thing which is significant is that a lot of them are well-known brands and brands that have been listed on the exchange for a very long time. And so the knowledge and understanding of those products is very well established across the country. I would also say that a number of them are very well-run companies in terms of issues of corporate governance. Many of them have had no issues over the years, and so they've basically been able to preserve their well-known brands, even if they're brands that have developed in Nigeria or worldwide known brands.
And 2012 could provide new investment opportunities in the consumer space. Promasidor, makers of a range of milk-based products, is one of several companies contemplating listing on the Nigerian bourse.
We're very positive about Nigeria. Our shareholders are African. They take a long-term position. So we're reviewing, for example, more manufacturing sites. We have one in Lagos. We're reviewing opportunities elsewhere in the country to improve our distribution costs. We're looking at new brands, new categories, and I'm even given a kitty for acquisitions if we see those.
But operating in Nigeria's business environment is tough work. Poor infrastructure, particularly electric power and transportation, means higher costs put pressure on profit margins.
We've had, like many companies, to become almost self-reliant. We have 11 factories around Nigeria. In all those factories, and about a network of about 70 depots as well, in all of those, we have standby generators. Of relatively recently, and in some parts of the country, like in Lagos and in Aba, and our depots in the areas of Port Harcourt and so on, we are able to use gas generators. The generators are very expensive, but very reliable. But gas is much cheaper than diesel or heavy fuel. And obviously it's much more environmentally friendly. So, you know, this is part of the cost of doing business. Any company must have its own sources of power generation, otherwise it cannot survive.
It's very difficult. I think you see quite a few companies just stay within Lagos and allow maybe people to pick their products and take them and trade them. But if you want to keep control of your brands, if you want to manage your pricing, you've got to do that distribution or be involved in it yourselves. And cowbell milk is the most widely distributed consumer good in Nigeria, with the possible exception of Coke. So if you go into any village in the hinterland, you're likely to see cowbell and probably some of our other brands. And that takes effort. It takes probably more people that you would need for a relative sized company elsewhere, and it needs good old-fashioned shoe leather. You need guys willing to get out there on the street and make sure they're pushing that distribution.
And while the country's large population presents a huge consumer base, a large part of the population is indeed poor.
About 66% of our population are made of low-income earners. You have another 30% in the sort of middle-income class, and then you have, the rest in the higher-income class.
But with challenges come innovation. Successful companies have found ways to produce their own power, organize structures to move their products into rural areas, and introduce innovative product packaging that appeals to low-income consumers.
I think the single-serve products have made a tremendous impact in terms of the penetration in the respective sort of consumer segments. UAC has actually been at that for a very long time with the gala sausage rolls. But I think if you look at other products like detergents, toothpaste. I think that is where you've seen actually a lot of improvement in the last 2 or 3 years. So companies like Unilever have significantly stepped up their sort of single-serve packaging, of those kind of products. And that has really impacted their business significantly. That's where I think Unilever has seen a lot of growth in the last 3-4 years. The brewers were always almost 100% sort of bottle-driven products, but now you've seen the introduction of cans. Cans have made it a lot more accessible, especially as far as off-trade sales are concerned. This is sales of beer products in grocery stores or big supermarkets.
One factor in favor of consumer-focused companies listed on the bourse is the extent to which the market is penetrated. And strangely, the power problem has worked in their favor.
For instance, a Nestle or a Nigerian breweries still has markets that they've not penetrated just because their distribution, they haven't built distribution channels into those areas. And if you see how Nigeria's population is distributed, a lot of it is in the north, where some of the manufacturers are able to move their goods into because of the rail problems and all. Most have gone ahead to build capacity, build their own power plants. But there's a point at which it makes economic sense. You're building maybe 60 megawatts, 100 megawatts, then you're in business, essentially. Now, small company, to be able to build 100 megawatts of power, you need to have a huge market base. Your sales need to be in the range of hundreds of billions or something. So where you see companies like Nestle able to do that, smaller competitors can't do that. And the margins, the difference in margins when you scale up to that level, between getting from the grid, which is always better, of course, and building it yourself, begins to reduce, as that scale moves up.
It comes down to size. So there are certain barriers to entry for any investor wanting to come to Africa or Nigeria specifically, where power, of course, is one of the big weak links. And we've struggled, like many companies, over the previous 10 or 20 years to actually address our growth, which means that it's no surprise Nigeria, I think, is the highest per capita user of generators in the world. That's unfortunate for the people because that comes at a cost. And what we don't like is having to transfer all these costs onto the consumer in price. Of course, we're a business, so we need to be successful and make money. We are making money. We transfer that back into the business. And unfortunately, in this case, we've had to invest heavily in building a big power plant, which is about 7.3 megawatts, which is considerable, but it's small in comparison to other industries like cement and so on. But for food, it's quite sizable. And that means that we now secure ourselves a better, consistent supply. What happens in a company like ours or food manufacturers, if you get a 5-minute power droppage or switchover from the NEPA system, the national system, to your own generator, 5-minute stop is half a day's loss for us.
Looking ahead, macroeconomic reforms focused on increasing electric power generation, developing a national rail network, and upgrading roads should support the growth of consumer companies in Nigeria. With Nigeria's GDP expected to double over the next decade and population expected to surpass 220 million over the period, consumer-focused companies should remain an attractive investment offering in the Nigerian capital market.